Thought we'd kick off with the stock of the day, have a look at James Hardie, reaffirming its full-year guidance after reporting a 35% pop in annual profit thanks to strong demand for its fibre cement products in the North American housing market, with a 70 US cents special full-year dividend paid and a second half dividend of 30 US cents a share declared. Shares tipping into the red in this morning's trade. What do we think of Scott, the James Hardie update and the stock at these levels?
Kasha, they couldn't have done much more in this update, can I say? Sales up 24%, profit up 73%. You say, well, what else? What else could you have wanted? What else could you have done? So a pretty good result. The share's up a little bit as a result. Pretty workmanlike performance across the board. The key question, unfortunately, for businesses like James Hardie is trying to work out where we are in the economic cycle. Because if this boom continues, you're going to expect a whole lot more of that sort of result over the next coming months, years, potentially. If we're at the top or on the way down, then things are going to get better maybe for a long time before, sorry, worse for a long time, potentially before they get better again. So really, really strong result. You'd expect that in a booming US economy. So all of those things to the good. Pretty impressive too, given the cost inflation that plenty of businesses have been having, to be able to get a 24% growth in revenue and a pretty good bottom line number. Probably a lot of cost control there, maybe some one-offs too. So be a little bit careful with extrapolating the bottom line. But you can't fault the result. A really, really strong result. Trading at 19 times earnings though for a cyclical business. I'm not entirely sure now is the right time to be buying James Hardie shares, unless you believe the boom has a decent way to go and potentially can go a decent way higher. I don't want to make that bet. I wouldn't necessarily run out to sell it, but I probably would have owned it in the first place. I think there are better building materials companies out there. But as I said, you can't fault the result today.
Yeah. Mark, what do you think? This time last week it was CSR with a pretty similar result and a pretty similar chart.
No, that's true. And I sort of concur to what Scott said, and it really does come back to your view of the market, because in the US, the typical house construction over there is paneling on the outside. So like Hardie, the boards. Yeah. That's how they build them.
Bricks, is it?
No, and part of that's to do with earthquakes, depending on where you live and so on. So the west coast, they tend not to use a lot of brick because they come down and squish you if you have a big earthquake. Anyway, so I think that's true, and the earnings have spiked up, and that's good because they are converting the opportunity and the growth in the market. But if you look at the forward commitment of what's being built over the next couple of years, there's an enormous pipeline. So I think they've probably got a couple of years left. But look, who knows? You know, we're in a very, very volatile world. The US is way, way behind on available single house residences and so on. So there's a real lag in, or there's massive pent-up demand. So I can't imagine that going. They're also used heavily in commercial construction. There's a lot of that going on.
Right.
We saw it everywhere. So look, I think Scott's right. From a cycle point of view, if you're trying to time it, it's probably might be a bit late, but we're showing it returning, it's another way of looking at it, about 10% a year on our default metrics if they can maintain a good growth rate. And their growth rate, by the way, I'm not talking about last year's.
Yeah.
Their average has been 6% a year over the last 10 years. That's about the average, which is not bad.
Right.
So if they can maintain that, you'll get about 10% return, but it's not franked.
Right.
And they pay out they pay out all the earnings effectively. So it's a very high dividend percentage-wise. So look, I think it's all right. It's not something I get excited about personally.
Right. You wouldn't buy it at these levels?
No.
Okay.
Not for me.
All right. And there's all the great fear of America going into recession, interest rates. Anyhow, a lot of uncertainty.
I think the inflation stuff's interesting. It's worth talking more about that when we have time.
Yeah.
Because it's like a lot of these companies, like using James Hardie as an example, is if they've got good management, the inflation can go straight through. It doesn't necessarily hurt them. It hurts them when they don't.
Yeah.
They can't send on. But also what it does is it increases the prices. And if they're working on a margin argument, it actually increases their profit.
Right.
So even though it's a nominal increase in profit rather than real, that's how the market will value it.
As long as customers can pay the increase and you can pass it on. That's the big issue, isn't it?